according to the latest set of Purchasing Manager Index numbers from S&P Global, we can see, as ever, this is an index that's centered around 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. These numbers are kind of an approximation of GDP. GDP comes out only quarterly and is notoriously lagged, whereas these numbers offer a little bit more of a timely view. And we can see that here that really since early days in 2024, the economy has been slowing. There was the expectation that for a third consecutive month in January, what you would see is another contraction. And in reality, what we have is not only a surprise bout of growth with a reading at 50.2, but also the fastest growth for the region that we've seen since back in July. And so what all of this adds up to is another reason why whatever is anchored into here seems likely to remain. If nothing else, the ECB doesn't have much of an impetus to get more dovish on growth grounds, and getting more hawkish isn't really within the realm of possibility, having basically signaled to markets that 4 rate cuts are coming, and having the markets anchored that expectation really as thoroughly as they have here, in fact, surprisingly so relative to others. It seems unlikely that anything like abandoning policy that's already been so well established is in the cards. Certainly the ECB might tinker inside the margins, but that there is a dovish bias seems unshakable. The question is, how much more of one could we get? And this kind of PMI data suggests there's probably little scope for something like that. In fact, bond markets in the Eurozone have already noticed. What we find is that from the bottom here in the inflation expectations that are baked into short-term German bond markets, this is the 2-year break-even rate. It's the inflation rate implied by taking the difference between nominal and real German 2-year rates. Of course, nominal rates minus expected inflation is how you get to real rates. And if you take the difference between nominal and real, it's that expected inflation component that you're left with. So this is essentially the market's expectation for near-term inflation in the Eurozone's largest economy. And German markets are kind of a bellwether for the region as a whole. So what you see here should apply not just to Germany, but to the whole of the bloc, at least as far as sentiment is concerned. And what you find is back in August, inflation expectations bottomed. And since then, after a period of chop and digestion here, have been moving higher, in fact, increasingly so in January. That sort of explains how we jumped from here in December to here now in January. This is that big hawkish adjustment. Well, there's that big acceleration over the same period of time in inflation expectations. And of course, inflation comes alongside growth. So the green shoots that we see in the PMI data perhaps speaking to something that the bond markets have already sniffed out, which is that the growth dynamics in the euro area are quietly getting a bit better. If we look at the ECB's main North Star, they have a single mandate, unlike the Fed. Their goal is simply to get inflation on target. This has been moving in the wrong direction. The latest CPI numbers here at 2.4%. That's the third consecutive month of increase and the highest reading since July. Moreover, the actual makeup of where the inflation is coming from is a bit troubling. Take a look here at the components, and what you find is the biggest one here is hospitality. Now, energy has come up a bit as a consideration. That's not entirely unexpected, but of course what we've seen in recent weeks is that crude oil has started to fall again. Natural gas is weaker again. And so perhaps this is something that ultimately gets rebased out of calculations. And if you dig into this miscellaneous component, it seems like the biggest issue here is actually auto related, and in particular auto insurance related. So looks like all of this is ultimately a function of what's going on with the cost of fuel, the cost of upkeep of vehicles, and all of what's going on here, again, becomes linked to what happens if the cost of energy roll over. The real troubling component is that the biggest and most sticky bit should be the one that has more give if you consider the impact of the business cycle on what is ostensibly discretionary spending. So, needless to say, the summer tourism and vacation season is long since over. Moreover, we have had a period of weakness, as we see here, January notwithstanding, in Eurozone economic performance. We've been slowing here almost since the very beginning of last year. One would think that spending on hospitality would be especially susceptible, because, of course, it is based around discretionary propensity to consume. And if the economy is slowing, then perhaps discretionary spending is first to get the axe. But apparently that's not what's going on here, because as we look at where the stickiness remains, it is, in fact, proving impervious to that business cycle headwind. So, again, if you're the ECB, you're looking at sticky inflation that isn't unraveling even at the pace that you would like to see it, even in the places where it ought to be. And at the same time, you're getting signs that the economy is perking up a little bit and inflation expectations are on the march. What you're probably not going to do is say anything extra dovish. You might not dial up hawkishness very much or at all. You might think, well, these are only a few data points. Let's wait and see. Moreover, there's a ton of political risk linked to what the new U.S. administration might be doing, be it with tariffs or the war in Ukraine right on Europe's doorstep, or indeed the situation in the Middle East, which Europe is, of course, nevertheless tied into, both because any sort of disruptions in the Red Sea primarily speak to the flow of goods through the Suez and therefore into Europe. And of course, because of a refugee knock-on effect on Europe that we've seen in spades over recent years. So there is perhaps room for the ECB here to say, you know what, we need to wait a while to really get a cleaner sense before we jump out the window and abandon our dovish bias for something more assertive. But certainly it doesn't look like there is much room for this to be a dialing up of dovish intent when the ECB meets. We're also going to get a Eurozone GDP data this week, and there is an expectation of a slight step lower in quarter-on-quarter terms from 0.4 to 0.1%, but we can see the overall trajectory has been improving, and this looks like a wiggle lower within that trajectory rather than something that upsets the apple cart. In fact, if we look at year-on-year figures, we can see the expectation is actually for a rise of 1% year-on-year, which is the speediest in that kind of smoothed out metric in a while. Moreover, if we look at the Citigroup Surprise Index that shows us how recent Eurozone economic data has performed relative to forecasts, what we find is that we've kind of started to hug the zero line, which is to say that expectations are generally pretty well tuned to what realized economic outcomes are giving us. There's a very slight negative bias here at minus 2.7 on the index, but that's hardly anything to scream about. It seems like economists' models and the reality of the Eurozone's economy are at this juncture pretty well in line. And what that means then is, again, this becomes well anchored. Whatever comes out from these GDP numbers is then seemingly unlikely to give us any kind of a strong impetus one way or another if it is going to register somewhat close to forecasts. But given how well expectations have been holding in this configuration, the asymmetric risk is that if you're not going to get a dovish surprise, then anything that you might get that is surprising would be on the hawkish side. Perhaps not because the ECB does anything overtly hawkish, but because there is simply no room to go the other way. So if there was some sort of speculative fervor, some sort of extrapolation of what the ECB says, even if all of what they're saying is acknowledging some of the recent progress made on growth, then the only sort of thread to follow seems likely to be a somewhat more hawkish one. Now, this is where the trade starts to emerge. If we take a look here, we can see that the Euro-USD exchange rate has followed very closely with the spread between German and US two-year yields. In fact, the relationship has been particularly close since the beginning of January of 2023, when you started to see some settling on hawkish policy from both of these central banks, and the conversation around the arrival of rate cuts and when and to what extent really took center stage. And so you can see the Euro USD exchange rate here following very closely with where the balance of relative power between front-end yields seems to be. And of course, this should make sense. This is sort of currencies 101. Whichever currency offers the best yield is the one that tends to see flocking demand, because, of course, one person's borrowing costs are another person's yield income. And holding the currency with the higher interest rate means you can ostensibly lend it for more. That, of course, generates an interest differential that's favorable. And so what we've seen, not surprisingly, since the middle of September, when we got that hawkish rethink of Fed policy expectations, is that Germany's yield spread relative to the US moved against the euro, and that the euro followed that move. But now what you see, going back to perhaps November or so, is the yield spread has actually started to move the other way. Meanwhile, the euro is still in the doldrums. Its recent swing low happens quite a bit after the low in yields. Now, this is not the first time we've seen a scenario like this. Here is a similar turning point where the yield spread bottoms before the euro. Here's another one that's a little bit more narrow, the bottom here, and then the euro waits a while before it starts to rally, although, of course, this is a bit more inside of a range. This is a little bit more of a meaningful directional shift. So this alignment isn't perfect, but it does tend to be a kind of a homing beacon, and it does tend to be the case that when yields start to preview things, the exchange rate eventually catches up. So if the ECB does nothing here, if, like the Fed, it manages to dance around a status quo that doesn't dislodge expectations, that doesn't move the situation in a more dovish direction, and in particular, on the heels of a Fed policy announcement that sought to do exactly that, to not rock the boat, to not change things, and by all accounts seems to have succeeded in doing that, what you are left with is a euro that looks somewhat cheap relative to what this yield differential spread has been implying for some weeks now. What that means is that this creep higher in the euro that we've seen over the past several weeks might well have the catalyst for its next up move. We see here we've made some preliminary bid for an advance. We've overcome here into the 104 area. This was the former level of support, or former resistance becomes support here, just under 104, 103.83. We seem to be holding above that threshold here. The key bogey in front of us now around the 106 area, the swing high 105.58, the former bottom here now acting as resistance around 106.30. If we can get the euro through this area, then the road opens up to much more substantial gains, perhaps all the way back up to 108, the next kind of big inflection zone here. But the ECB may well, in doing nothing, give at the very least the nudge that markets need to look back in yields and say, well, at the very least, we need to come back and test this 106 figure. And then we'll see, which, of course, makes for an interesting opportunity, even just tactically, in the near term. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com. Commenting at Ilya Spivak on the platform formerly known as Twitter, as well as on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money will be back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
All right, we're back. Tasty Crypto Show. My name is Ryan Grace. With me today, of course, Shelly Van. Shelly, how are you?
I'm good, thank you. How are you?
Yeah, can't complain. It's almost feels like it was 50 degrees out today in Chicago. So I'm good. Wasn't that hot, but sun was shining.
That hot.
What's new with you? What's going on?
My hair is so clean.
Nice.
So clean. I went to a head spa over the weekend and had like each follicle cleaned separately. It was interesting.
Take a while.
Yeah.
Enjoyable experience?
It was strange.
Okay.
That's a whole other show.
All right.
We'd do it again, but it was strange.
We'll get to that at some point. We've got a lot to talk about today. Up to you. Where do you want to kick it off?
Well, do we have a question for the chat? I think I might have one.
Oh, yeah. We've got to shout out the chat. If you're not watching this on YouTube, get over to YouTube because that's where you can participate in the chat. You can type crazy things in there if you want to. What's the question today?
Do you have any strange hobbies? Okay. For me, I like to photograph bugs.
Bugs?
Bugs.
Oh, okay.
I love bugs.
Learn something new every day here.
Come on, Ryan. You got to have something outside of trading and, all of the tasty things.
This is it. This is all I have. Sad but true. How many bug photographs do you have?
Like a lot.
All right.
Yeah.
I do have a lot of questions, but I'll try to keep it to just one or two more. What's the craziest bug you've ever photographed?
Oh, I've got some gnarly, big beetle photographs from my travels. I moved back in state just in time to catch the cicadas. So,
at least you weren't moving back in state for the cicadas.
No, not for
the cicadas. Gonna catch the season.
It just aligned the right way, so I was very excited.
Okay.
I love them.
They're pretty nasty looking. Cicadas.
Says you.
Yeah. I didn't realize how big they were.
Yeah.
So, all right. Your hobby is photographing bugs. I don't have a hobby. I would love to find out what everyone else's hobby is. Let's see who's in the chat today. We got Laura here, Jose, Lone Sophos, what's up? Jen's Quick Reviews, Theta Trader, of course, Ben Butler, John, what's going on? Rustan is here. Whole gang is showing up. And you're repping Rustan's.
This is Rustan's logo.
There you go. Shout out to Rustan. All right, we're seeing a mention of Solana, so we have to just go there.
Let's go.
You can trade Solana at Tasty Trade now. Again, it was available, then it wasn't available. We're not going to talk about that dark period that we went through here in the crypto industry. Tough couple of years. Solana's back. I hear there are plans to expand the token list as well quite a bit at Tasty. So new product coming. I'm super excited about it. Solana today, Ripple is on deck. I can confirm that. Maybe if we throw it up really quickly, we'll go to the browser and just take a look at this so everybody can see that it is real, Shelly.
It is real. The theme of the day, isn't it?
It is, yeah. I like what you did there. We've got the crypto watch list up here. And if you go to crypto in the watch list tabs, you can see there's not only spot crypto, but also the Bitcoin ETFs. There's options on those ETFs or on some of them. We've got the ETH ETFs in there. And then there are crypto futures becoming more liquid month to month. Definitely seeing a lot more participation there when you look at volume and open interest. But you can trade all of this on the Tasty Trade platform. If you want to trade Solana, you want to trade the spot crypto product here, you have to enable cryptocurrency trading. You can do that in your account management section of your Tasty Trade account. But once you enable crypto trading, you can trade spot Bitcoin, Solana, ETH, everything else that's on this list, and then everything that's it's going to be coming soon too.
Let's go.
Yeah, I'm excited about it because I have a lot of different positions, but this is one of the bigger positions that I have in terms of Bitcoin, ETH, Solana, so I can add to some of the portfolio as well in Tasty Trade.
Love it. Very excited. Welcome back, Solana.
Theta Trader doesn't like it though. Sol is still straight trash, but better than Doge. Okay.
Hot take.
I like it. Fair enough. I don't see any hobbies yet.
Yeah, what? Come on, chat.
What's going on? All right, maybe we'll get some crazy, weird, hopefully don't cross the line too much hobbies as we go.
You're getting some praise, though, for your presentation on Saturday.
Oh,
well done.
Thank you very much. Yeah, just a quick point there. If anybody's interested in the digital collectible, everything you wanted to know about crypto but were afraid to ask, we did an hour-long presentation through Live Bash, did a live show as well in Tom's coffee shop prior to that on Sunday night. So the recording was on Monday at the beginning of the month, and then we just released this on Saturday. But the presentation for anybody that's brand new to crypto, interested in digital assets, starts with really what this is, talking about it as a technology. We then highlight why it's interesting to people as an investment. We look at it objectively. How has it performed? What's the volatility? How do you think about this within your portfolio? And then we talk about how you can actually start to participate. So going through a lot of different areas of the market, hopefully is a pretty good primer for anybody that's interested in this.
I think you did awesome.
Well, I appreciate that. So thank you. But let's move on. Solana now available, more tokens coming soon. Check it out over at Tasty Trade. That said, you alluded to the topic of the day earlier, Shelly. What is it, and why are we talking about this today?
We are getting real, folks. I, as a proper degen, I'm now growing up, and Ryan, you're my adult. So,
as a proper degen, I guess, what does your participation in the market look like typically?
Okay, so no.
I'll cut you off really quickly. I apologize. You're a very active trader. You trade a lot more than I do, a lot more than many people here.
Yes, very active crypto trader, okay? From a traditional standpoint, I hold a few stocks, but they just sit there. I don't even look at them. So I know very little from that side of it. So I'm coming at you from like real Web3 native, I will trade crypto all day. But that said, without the traditional skill set or knowledge base, it's been very entertaining, if you will. I'm like, ooh, this is cool. I want it. Or I like the story, or the narrative is shifting this way, and I think this cultural story is going to be interesting to participate in a financial way.
Okay.
So ape-ish, squirrel brain, bam, 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 just sort of everywhere.
What have you been in recently?
Oh my God, my mind just, well, Trump. And then most recently, actually, are my RWAs. Because last night, I graduated from like adolescent degen to like, okay, now I'm aging out. I'm getting more adult in my trading behavior.
Why did you pick this theme in terms of what's next beyond some of the meme trading?
Because I'm becoming more sophisticated, I will thank Tasty for that. I was looking at my bags and realizing like, oof, there's a lot of big picture, real world things affecting, the bloodbath that is currently my wallet. And it was like, okay, how do I do this in a smarter way? How do I, diversify my portfolio, if you will, with something less risky?
Okay.
And so what does that mean in crypto?
Okay. I think it's all risky.
Fair.
But in volatility terms, you're clearly on the most volatile end of the spectrum.
Oh, yeah.
That said, I do believe you want to diversify across narratives. I personally wouldn't only hold a bag of microcap AI agents, but also do think that you should have some in your bag, if that makes sense.
Yes.
So I think you've got that base covered.
Oh, yeah.
Another theme that, as we're going to talk about here, is real world assets, obviously. I believe you're going to see become a more prominent theme this cycle. And a lot of that's driven by what we're actually seeing happen on chain, which we're going to talk about, or what we're actually seeing happen within the financial industry. Some of the biggest players are really starting to make some moves, which I think is interesting. It makes it real in some case, no pun intended. But yeah, let's jump into that and talk a little bit more about real world assets. I don't know if you want to run through this or you want me to run through this in terms of what these are.
Oh, I'll let you take this one.
Okay. So what we're talking about here are simply traditional financial assets. Think Wall Street, think stocks, bonds. A lot of times when people talk about real world assets, they jump to real estate, like tokenized real estate or fine art. Imagine you could own 1,000th of this painting, whatever that means, a fraction of it. And there is that, obviously. But I think what you're seeing today, like where's the flow, what's actually happening, it's more so Wall Street assets, tokenized securities. So today, well, dollars on chain. The best example of this is probably stable coins. Mm-hmm. A real world asset, US dollar represented on a blockchain network, stable coin. It's quite often overlooked when we talk about real world assets. But what you're also seeing, treasury bonds, money market funds, debt instruments. I do believe you're going to see tokenized stocks, but we're not really there just yet. So that's what we're talking about. Just really simply, I guess the real world stuff, the Wall Street assets, the securities that exist today in a very, very big global marketplace, just moving on chain.
Yeah, that's exciting. And I think that even from my, somewhat silly perspective of how I've been participating thus far, I think that even I've noticed in these different regulatory environments, like, oh, it's getting real. It's getting more serious, if you will. And with that, what are the smart moves I can make? What is where's the big money going to go, and how can I get in ahead of it? I think that's kind of where my mind is at and how I'm trying to approach my trades.
Okay. Yeah, I think in that sense, and we'll point out some data here in a moment, it's still very early in terms of kind of front running this flow. That said, there's still a question of whether that flow is coming. But in terms of getting in front of it, kind of just being aware of this, it's definitely early. I think, again, it's going to be an important narrative, certainly one that has room to grow given a more conducive regulatory environment. That's really what it's going to take to get larger institutions involved. But the way that I think about this is like just an upgrade to the financial system. It doesn't replace anything. On the one end of the spectrum, there was a point in time where we did business before email. And so we're moving to the other end of that spectrum continuously. I just think this is an upgrade to the tech stack when you think about how blockchain networks could be involved in tokenizing securities. They're more liquid, more efficient, fractionalized. You can transfer them, trade them, and borrow against them 24/7. It's just a bit more transparent, maybe more efficient of a market, I guess, from that standpoint, if that makes sense. Mm-hmm. As a result, I think it's inevitable. But that said, let's just look at one use case or one example of this here today. Beyond stablecoins, that's, in my opinion, the biggest and most real world asset on chain. But I want to talk a little bit more about Ondo Finance, and we also pull in a pretty large, if not the biggest, institutional investment manager in the form of BlackRock, and try to tie this all together for everybody. We will look at some of the tokens, the governance tokens, the ways that you can get exposure to this theme. There's a larger macro trade at play here in terms of just what blockchain networks these platforms are on. But I want to highlight Ondo Finance. If you Google this, it'll be one of the larger real-world asset platforms or protocols, applications that pop up. And so Ondo is a tokenized real-world asset platform. They have something called the Ondo Short-Term Government Treasuries token, or I think of it as a fund, but it's a token. It's on a couple different blockchain networks. It's on Ethereum, Solana, Polygon, and I think within the last 24 hours, just announced that it'll be on Ripple or on the Ripple ledger. But what this is it's a tokenized platform or real world asset platform that has this token that institutional investors can park cash into to generate yield, and it's supported by BlackRock's USD Institutional Digital Liquidity Fund, which is just a tokenized money market fund. I realize, what I'm saying is a tokenized money market fund via securitize. Arguably an experiment. I mean, in the grand scheme of things, we're only talking about a couple of $1 billion against much, much, much bigger.
So we're early.
Very early in that sense. Is it real? Will it work? You're seeing it grow for sure. But this is an example of a large financial institution participating and leveraging public blockchain technology. That's the other important piece to this. And so you can kind of see to some extent with these arrows the fund flows in that sense. But institutional investors across these different platforms. And when we put institutional investors into this big bucket, but it's a variety of different participants, through this token offered by Ondo that's backed by BlackRock or their fund that's on chain, you can now generate yield directly and remain on chain as an institutional investor. That's super important if you're dealing with, it's important for anybody, but it's certainly important for somebody that's going to be dealing with billions of dollars, and you would be losing money if you're not generating some interest on that. When you're not participating directly and taking risk, let's say. So cash management is probably the way to think about this.
Makes sense.
Yeah, all happening today.
Yeah.
This is not something where, this is an interesting idea. These large institutions are participating in this way. And this is something that's been ongoing, but in an environment where you really haven't had a regulatory framework to adhere to. There is, obviously certainly rules and regulations that these institutions have to abide by. But generally speaking, there's not a regulatory framework for a larger kind of market to evolve, but that's coming. Or maybe to incite more participation in the market.
So you said the institutional investors can get the OUSG. How does someone like me participate in this?
There's not a way for you to directly participate where you're going to be able to hold this token and generate yield. The easiest way for somebody to do that would be to hold USDC, park it with Coinbase or another place. You could even do this on chain in a more decentralized way. but park it somewhere where you're going to be able to generate yield as a retail investor. In this instance specifically, you're not able to. But you can invest in the underlying platform, which is Ondo. You can purchase the Ondo governance token. You can do that through the Tasty Crypto wallet. You can do that directly on chain through a decentralized exchange, or in some cases, you can get it through centralized exchanges. But that would be the equivalent of really Ondo being a company and investing in some ways. This is how I think about it. It's obviously not the same thing, but in some ways, investing in the stock of that company. Ondo's the company. You're investing in this token. It's a governance token. It gives you a voting right. The idea is that if the value created by Ondo grows or increases, the usage of these platforms increases generally through these network effects, that token should be more valuable, all else equal. And that's how you could participate in this theme. So if you're looking at your portfolio and saying, okay, I need to diversify across themes, I've got the memes, I've got the AI, I own a little bit of Bitcoin, I got some ETH, what are possible narratives that I want to ride that wave that you talked about, the importance of kind of being aware of that trend and kind of jumping on and off at the right times? That's trading. This is, I believe, one of those narratives that you want at least on your radar.
Awesome. And I see a lot is going on in chat.
Awesome. Yeah, I have just been on a rant, so I haven't noticed. But really quickly, if we can pop up the Tasty Crypto wallet, I mentioned that this is available through a decentralized exchange. If you have Ethereum, you have USDC on Ethereum in the wallet, you can swap that for Ondo. I'm not sure if we have it on the screen or not, but if we can pull up the Tasty Crypto wallet, the app here, we'll focus on this in just a second. But yeah, this is just one of many real-world asset platforms that are trying to do similar things in the space.
Theta Trader is asking, isn't there a crypto coin backed by actual gold?
Yes, there is. I want to say it's through Paxos, but yes, commodities as real-world assets, I guess represented in tokenized form, gold is primarily that commodity that we're seeing represented. There's not really like an oil token, if that makes sense. But you have the ETFs that invest in futures. You have a United States oil fund if you want to use an ETF to invest in the price of oil going up, or if you want to short it if it's going down. Those vehicles exist. I expect that you would see something similar. ETFs move on chain, right? I mean, you're seeing the direction that these things are going in. So I think that for people that want to stay on chain, and just as there's an overall shift in how the whole system kind of works over time, for sure, you'll see blockchain networks support a lot of this.
All very exciting.
Yeah. So I don't know if we can get the platform up on the screen, but if we can jump to the browser tab here, I want to take a look at the block. I love the block's data dashboard here. They've got a ton of different categories. And what we've done is we've clicked on the RWA category in DeFi. So down here on the left-hand side, real world assets. I just want to point out a couple things. Maybe there's some trade ideas here. So where is this all happening today? The majority of this activity, when we look at BlackRock's fund, for example, Buildo, this is on Ethereum. It's moving to other chains, but in the same way that there's more TVL or capital locked up on Ethereum, you're seeing participation there, but also moving to other areas.
So why Ethereum?
I think, as a large institution, you're looking around at this stage, and Ethereum seems to be more of an obvious choice from a security decentralization standpoint. For larger institutions, I think it's less about, when we're talking about some of this, the network fees are probably less relevant than someone who's actively trading as a retail investor. Maybe more secure, more decentralized in some ways. You can also think about that as just also being more robust. It's where the biggest DeFi applications are. It's where the most TVL is. It's been around the longest. It doesn't mean it will be there forever. I don't see why that wouldn't be true, but you know what I mean? Like, it's got the first mover advantage, and it's where you're seeing a lot of activity already. And so you see that here today, but important to keep an eye on this. It's also moving to other chains. And so there's a way to possibly look at, okay, what other changes is happening on and why, and is there a way to trade or invest in that use case? Other platforms like Ondo possibly, even though, as we've shown here, Ondo is moving to other chains. But yeah, Ethereum is the biggest chain for this, as you can see in blue. If you look at the categories of these Wall Street assets that are moving on chain, it's government securities. What does that mean? Treasury bonds. Very short-term treasury bills. That's how we get to this money market fund that we're talking about, these investment vehicles that we've highlighted. So still largely in government securities, and then commodities, asset-based finance. I don't know specifically what that is, but you can see real estate, though people jump to it, very small. Commodities, private equity, still early days. You're not even seeing equities on here. Publicly traded equities. So great dashboard for that. Then the one other thing that I wanted to point out is, before we run out of time, DeFi Llama, where you can go to this narrative tracker, and we get back to the idea of diversifying across narratives. And if you go down here, if I go back, you can click on real world assets here. So you can see the whole market cap of the space, given how they've categorized it. It's about 38 billion. Pretty small when you consider the size of some of the companies in the stock market. Again, this is super, super small in the grand scheme of things relative to real world assets. But here are some of the either direct ways to participate or to play this, I suppose, versus some of the other ways to get kind of secondary exposure. Chainlink is an oracle. And so when you need a price to reference that's in the real world so that you can represent it on chain, there's obviously a use case there. Ondo we've talked about, and a handful of others, but this is a good way to kind of start to just get your feet wet in that sense.
Awesome. Yeah, this is all very exciting. And I think as we've watched just over the last couple of weeks, big things in the world happen. DeepSeek comes out and AI tokens tank. This is something I'm very, very interested in sprinkling.
Yeah, what stands out to me is that you have people like Larry Fink, who run BlackRock, talking about just recently tokenizing or urging the SEC to rapidly tokenize stocks and bonds. You have these huge, institutions that are participating in that sense. The platforms that facilitate this are growing, and then you can look at the activity on chain, and you can see that that's growing as well. So there's a way to trade this from just simply the macro perspective, looking at maybe this is a reason why Ethereum in the future could do better. Or maybe I'm very interested in some of these protocols themselves or these applications themselves to invest in, because there's a real use case here, and we can measure the growth of that use case, and it's generating a lot of fees. That might be returned to those token holders if there's a regulatory environment that's conducive to those sorts of activities. A lot of this looks like traditional finance. It is, but it's moving on chain. Mm-hmm. And I think there's going to be a lot of value that's unlocked as a result. So we'll keep an eye on this for sure.
Love it.
Got 1 minute left. Any last words, anything you want to wrap up on here?
I know we can't show the wallet at the moment, but can we just verbally go through how I would get into something like Ondo or Chainlink?
Yeah, absolutely. The way to do that directly on chain through a decentralized exchange, if we use the wallet, is to have USDC or Ethereum, move it to that address that you control. So if you have Ethereum with, let's say, tastytrade, you have USDC with Coinbase, and you want to do something with it on chain, you're going to need to move it outside of that ecosystem, outside of that account, transfer it to the wallet address that you control. And then once it's there, you can just swap this within the app. So in the same way that you have the concept of funding a brokerage account, once you have your funds on chain that are in your control, you can sign transactions, you can trade in the wallet, so you can trade ETH for Ondo or USDC for Ondo, or you can go to a decentralized exchange directly, such as Uniswap, connect to it and trade it there, assuming there's liquidity. But you can do that through the Tasty Crypto app, even though Ondo isn't offered through Tasty Trade. You can get ETH there.
So get ETH at Tasty Trade, put it over in my Tasty Crypto wallet, and then swap.
Then you can trade it for some of these other tokens. Would love to get to the point where it would be true that you could move USDC directly on chain. I think there's a huge value add there, so we're going to work on that as well.
Awesome.
Yeah. Exciting stuff.
Well, we've learned a little bit about, let's see, somebody makes puppets. I'm not the only weird hobby.
What kind of puppets? You know, details matter with some of these hobbies. What kind of bugs?
We've got some gamers, Magic the Gathering. Let's go.
Grumpy Mike, cardboard boxes. Yeah, I was going to say, we're kind of getting into that hoarder territory. You know, one step away from my collect trash. No offense, Grumpy Mike, but you're right. That's hoarder territory for sure.
I love doing laundry. Does that count?
As a hobby?
I mean...
No. It's a chore. All right, we've got a wrap on that. We've got Victor Jones up next with The Price of Truth. Don't miss it. Shelly, can we announce the new show yet, or we're going to wait for that? I know we feel like we've hinted at it, because I was just trying to figure out what to say next. No one's going to see you until next Wednesday, but pretty soon they're going to see more of you.
Yes.
More often.
Yes.
Okay.
And it's going to be so much fun.
New show coming soon. We'll leave it there. I'll be back on Monday with Katie. Until then, I'm Ryan.
I'm Shelly.
Peace.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Oh, yeah. It is Wednesday, January 29th or so, they say, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, little podcast, where we like to explore the incentives that govern our world. Welcome, everybody, to The Price of Truth. I'm your host, Victor Jones. But you're not here for me. It's Wacky Wednesday, and that means you're here for the one, the only, Chris Vecchio. Chris, how you doing, my friend?
The price of truth is $25 million, apparently.
25 million. More on that in just a bit. I want to know about you. Don't get right into the meat and potatoes here, my friend. How are you doing inside?
It's the year of the snake. I'm a year of the snake person, so I guess this is my year.
Is that how it works?
I have no idea.
Sent me Gong Si Fai Chai, everybody out there, or Gong Hai Fat Soy, I guess, if you're Cantonese. My wife sent me this big, long video about how good it was for I'm a tiger. How good it was for the tiger in the year of the snake. And I was walking around for the last couple of days thinking, hell yeah, this is going to be my year, right? And then I think her brother reads out like the animals in order of auspiciousness. So who's the most lucky all the way to the bottom. And I'm like 7th. Like I'm not even in the top half. And I looked at my wife, I go, what the hell is this? And she goes, I thought you could use a little motivation for that. Like she was just like, I knew it was wrong, but I sent it to you anyway because I'm ignorant to the whole deal. She was like, I just thought you might appreciate it. I was like, I'll never trust you again, woman.
It'll help you hustle. Like you're only a 7th place kind of guy, Victor. Those are rookie numbers. Pump those up.
Exactly. Just lied to my face. Used the ignorance of her culture to just lie to my face and try to get me to to hustle for the year. Absolutely furious. And I'm like, oh, well, and the funny thing was, she was right. Because as soon as I found out I was 7th, I go, I'm not going to work hard this year.
It's like, actually, in the year of the snake, it says, kick your feet up and sit back. If you're a tiger. Okay. All right. Not a problem. Exactly.
Shout out to everybody watching on tastylive.com, as well as those watching on Tasty Trade desktop and mobile applications. But if you want to be part of, the chat somewhere on your screen with your screen names and your comments, both appropriate and otherwise, there's only one place to do it, and that's on the evil Google YouTubes. I used to think they were going to be soon to be reformed, but I've since realized that there's just a new world order. It's Larry Ellison, Sergey Brin, Elon Musk, and Sam Altman. I'm most scared of Larry Ellison. Larry Ellison was like the nice old man who I thought was like, okay, I'm not sure about this guy.
The guy buying all the property on Hawaii and taking all the land from the people. Okay, yeah, go ahead.
The guy, but I feel like everybody's doing that, right? Zuckerberg's doing that, Oprah's doing that, Obama's doing that. You could say that about anybody. They're buying all the property in Hawaii and they're screwing the locals. But no, and then I thought about it. I'm like, oh my God, this guy owns all the data. When I thought about Project Starlink?
Stargate, like the very cool movie with James Spader and Kurt Russell.
Yes. When I thought about that, I'm like, oh my God, this is the guy. One of these guys owns all of the databases in the world, pretty much all the most important databases. So he owns all the data, and the other guy has the intelligence. And then I don't know what Masa-san is. He's just the money guy. He's the bag man in case it all goes wrong.
Wait, but doesn't when he gets involved, it all goes wrong? Isn't that usually something shtick?
Right. He's like the what do they call that? When you're like if something goes wrong, they blame you. What's that called?
Scapegoat.
Scapegoat, yes. He's like the scapegoat for the whole thing. If anything goes bad, they're all going to point to Masa, and he's got nothing to do with it.
Our man famously loses money on Uber as a VC, and then sells all of his NVIDIA a few years ago. And listen, he's worth more than both of us combined. So who are we to say anything about his investment?
Bro, he's lost more money than I'll probably ever make in my lifetime. And you left out WeWork in that little list of
who could forget?
Bus.
But Adam Newman's landed on his feet, so everything's fine. Everything's fine,
bro. And he just hops right into real estate. You know what I mean? Just happens to go right in, just swooping up. What do they have? Something like tens of thousands of properties in the South, just buying up single family homes or in apartments. I think they're multifamilies. And going, hey, interest rates are high. We saw that coming. Do you want a home or not? If so, come to our co-living spaces. I hate that dude. Anyways, shout out to everybody in the chat. Do us a favor, keep that chat pumping. The more you type in, the more your phalanges are moving, the more the Google algorithm is spoofed and is forced to put us in front of as many people as possible. And we get to share the truth. Shout out to, I guess before we get to the good stuff, did you watch any of the RFK Jr. hearing today?
I listened to it, which I probably should have watched it. If I'm going to pay the fee of listening to his voice, I might as well get the full show.
Oh, what a dick. You're such a dick. You think?
You want to do a whole episode about whose people's voices I like or don't like? We can do that for the next hour.
Could we?
Yeah, we'll rate them on a scale of 1 to 10. Okay,
it used to be brutal. And then, I don't know, some part of me grew some sort of love and affection for the man. So now,
listen, it's from a. You really should. Personally, my own disposition is like it's from a medical condition, so I should have knocked on it. But it is. I don't have good hearing, so
substance over style, Christopher Vecchio.
Well, do you know what? There was that particular.
It's not like Fran Drescher's voice, okay?
That is also another. That's another voice. Would not be like. One of my babysitters growing up was a big fan of that TV show, The Nanny, right? And like that was on every day in our household before.
I can tell there's a lot of cultural influences on you.
Yeah, for sure. Like when I eat 2 slices of pizza, my body only thinks it's 1 because I put them on top of each other. Like I still remember.
I don't get the reference.
Well, that's a reference from The Nanny, Victor. So,
Do you know what was on every day when my babysitter when I was young? Golden Girls. Bro, I watched Golden Girls every day when I was like 6 years old.
You know what's great about the Golden Girls? That both of our most recent presidents of the United States are 20 years older than the actresses in the Golden Girls when they started filming the Golden Girls.
That's a hilarious reference.
Donald Trump is closer in age to when...
Why do you know that?
Donald Trump is closer in age to when Betty White died than he is to when Betty White started filming Golden Girls. So is Joe Biden, for the record. So that's not a partisan thing. But, can we end the gerontocracy, please?
R.I.P. Betty White. I'd vote for Betty White I'd confirm Betty White as which secretary position would you give Betty White if she was alive today?
I'm thinking about...
Or ambassador.
She was in Grandma's Boy, right?
Yes. God.
That's okay. So that I'm thinking about the skills that she had.
Was she?
Grandma's.
No.
Was she?
That wasn't Betty White. No, that wasn't.
What sweet little old lady?
That was in Everybody Loves Raymond. That was
Yes.
Loves Raymond.
Yes. What
you were an Everybody Loves Raymond guy, huh?
Doris Roberts. Yeah. No, it wasn't an.
I feel like
we were a Seinfeld family.
No, I'm saying you personally. I feel like you. What's the guy's name? And Raymond what?
Ray Romano.
Comedian's name. Yeah, Ray Romano. I feel like you've got a lot of Ray Romano in you.
Okay. I suppose it's better than what was the other guy? James, the big,
the huge dude. He's
King of Queens.
Anyway,
King of Queens.
I promise you this.
Let's talk about sitcoms from the 90s today. There wasn't a Fed meeting today.
All right, Christopher Vecchio, we are contractually obliged to talk markets. We can't continue this line of questioning. First, price action, and then I suppose the why, if the why matters. S&P 500 down 0.5%, the Nasdaq down 1/4, Dow Jones down 1/3, and the Russell down 0.25%. My friend, what's your take on price action today before we get to all the good stuff?
First, apologies for misidentifying someone in a 19-year-old movie there. What could have the Fed done today, right? They're kind of painted in a box. Today felt like they were trying to put toothpaste back in the tube because the December Fed meeting, when you read the minutes to contextualize the policy statement and the summary of economic projections they put out, from my point of view, it looks like the Fed was fairly concerned about the impact of tariffs on inflation. And that chain of thought is, you can find that thread through the FOMC minutes from December. So today, Powell is taking a very ardent stance now that he has a new boss again, that he's not making any sort of speculation on the impact of tariffs. He's going to see what happens first. And that really does make sense if you take a step back. The Fed's not going to do anything in anticipation of what may come unless they see conditions on the ground changing. When you think about what happened after the breakup of Silicon Valley Bank and Signature Bank that weekend in March 2023, the Fed ultimately raises rates a few weeks later, and that kind of threw people for a loop. Like, why would they do that? It's because in the interim period, credit conditions never tightened. They didn't see any knock-on effects to the banking system that would suggest that they need to abandon their pursuit of stomping out the COVID-era inflation to save regional banks. And in hindsight, was that the wrong decision? No. They read the tea leaves correctly. They didn't need to start loosening again. They could continue their fight, and they did. So this time around, right, they're not going to skate to where they think the puck's going to be. They are a reactive group. They are not a proactive group of policymakers. The Fed's always late, right? They're always fighting the last war. And so in that sense, the Fed's kind of trapped right now. The tariffs are announced, but they haven't started. So to say that the impact here has been felt and they could say, we need to raise rates, we need to lower rates, we need to keep rates on hold, they just don't have the answer right now. Powell was put on the spot a few times. He even chided a reporter today and said, listen, I'm not going to talk about any particular politician's words. I'll give you a chance to do that again. And I thought that was fairly instructive as well. So the Fed right now is, I wouldn't say listless, but it gave the markets exactly what was expected. There was a 99.47% chance that we didn't see a rate move today or any indication that really we would see a rate move in the next few months. Sure enough, the market's still pegged to a June rate cut, if one more to come in the first half of this year, and then another one in December of this year, and a final one in December of next year. That hasn't changed from where we were before the Fed. So net, the market got a Fed that's in wait-and-see mode, telling us that 2 cuts are still coming. The market's priced for 2 cuts. So we've turned our attention to those tech earnings, which, quite frankly, given the news of the past week, what's happened since the last time you and I spoke, I'd say that's far more important for broader sentiment right now.
So much to unpack there. So I would agree with you. They're kind of in a box. I don't know. There's a part of me that thinks are tariffs inflationary or not? To me, I feel like it would be a helpful scapegoat, speaking of scapegoats, because in my mind, their inflation fight is far from being over, whether or not you implement tariffs or not. Am I crazy for thinking that? PCE is still 2.4%, 2.5%, something like this. And last time I checked, the Fed's target was 2%. And so this idea that you're going to get this world of ceteris paribus, right? This idea that you're going to get a world of business conditions and fiscal conditions, which are going to just perfectly allow you to land this thing down at 2% within a reasonable amount of time. To me, that's an unreasonable expectation. So there's some part of me that's going, are we just in a place where we're okay with 2.5%? Are we in a new normal right now, Chris? I know if you ask the Fed this question explicitly, the answer will be no, and no, we need 2% is the target, and we need to be anchored. But it seems to me when we were at 4%, the rhetoric from the Federal Reserve was much different, right? Inflation is too high, we blah blah blah. Now we're 2.5%, and the risks are balanced. And it seems to me that as long as the risk continues to be balanced, or at least that's the narrative coming from the Fed, which is the unemployment rate's not creeping too high, then you can use that as your alternative, as your counterbalance to the reason why you can't take action on a 2.6% inflation rate. Am I sort of crazy for thinking that the world and the public is slowly getting used to a 2.5% inflation rate, and that the urgency to move inflation down to 2% is sort of gone off this theoretical fear of what it could do to unemployment? Am I crazy for thinking that?
I didn't take that away from the Fed today. I didn't get it away from that. My point is, we're not at 2% yet.
Well, then let me
balance. Go ahead.
Sure. That's the thing. The Fed made, if we think about the Fed's dual mandate as kind of like a scale, or a balance, the scales of justice, if you will. We think about where we were coming out of August. The SOM rule is triggered. SOM rule, for those that are unaware, forget about it. Let me just give you a quick reminder. Claudia Sahm, a former Federal Reserve economist, Council of Economics advisor under Obama, has this rule where if the unemployment rate rises by more than 0.5% from its lowest point over the past 12 months, the 3-month average, of the unemployment rate rises by more than 0.5% from its lowest point over the last 12 months, then you're in a recession. And if you were to look at this model, it comes out only a few years ago, so we didn't have this for the global financial crisis, what have you. But if you look at this model and backdate it, every single recession we've had in U.S. history, this rule is ultimately triggered ahead of time. So in August of this year, we see that the rule is triggered. We get that rise in the unemployment rate, and the Federal Reserve reacts accordingly, where they effectively say, you know what, we need to start thinking about cutting rates. And so September comes along and we get the 50 basis point rate cut because one of the tools that they use tells them, danger, Will Robinson. Well, sure enough, the next few months go by and the Sahm rule untriggers. So we're not actually in the recession condition right now, interestingly enough. And we haven't been for a few months at this point in time. To that end, we see that the Fed tells us today that they see a labor market now that's actually in better balance. They're not really so concerned about the weakening. And in turn, on the other side of the scale, they tell us for their inflation mandate, inflation is not really making the progress that they thought it would anymore. Granted, this is the base effect period in the data where the CPI headline would rise. I've made the argument in recent months that even if you got a 0.2% run rate month over month, you would still see the year over year rise. And that's exactly what's been occurring. Powell acknowledged that today, where the 0.2% month-over-month readings we've been seeing are largely consistent with a 2% year-over-year goal if we were to get that strung together over enough period of time. But it's that small tweak, right? The labor market's actually better and holding up more than we anticipated, while we're actually seeing inflation hold up. So they have to balance or rejigger the statement in a little bit more of a hawkish manner, which at the end of the day, is that a bad thing, big picture? I've consistently made the argument, as you know, for the past few years, if the economy is doing well, corporate earnings are improving, and the Fed seems to have a control on the situation, then the market's fine. And right now, 2 handle on inflation, 4 handle on unemployment, economy growing between 2 and 3% in real terms. Those are all good things. We have double-digit earnings growth right now in stocks. So, the Fed is not necessarily comfortable with where inflation is, but it also understands that there's more work to be done, which is why they upgrade their assessment of the labor market and they downgrade their assessment of inflation today. To just put a cherry on this, if we were to look at various different, we'll call them independent observers, like the Tax Foundation, for example, or the Peterson Institute of International Economics, they started to model out what the impact of the Trump tariffs would be if we keep things as they are, no tariffs, if we do a graduated 2.5% rate, if we go 25% across the board, if we do just 25% against Canada and Mexico and 10% to China, or just 60%, right? So I don't need to go into every scenario. But basically, you're looking at a world where inflation is probably peaking right now and declining over the rest of 2025 if no tariffs are put into place. If tariffs are put into place, CPI probably sticks around near a headline level of about 3, maybe 3.5% at its peak as we adjust. And then by the end of next year, it gets back down to the Fed's 2% target. So how inflation, this is why the Fed's so focused on this. Either we're looking at a path to where we're getting headline inflation back to 2% in the next, say, 9 to 12 months, or realistically, it's going to be 21 to 24 months. And they don't want to lower rates too much now to get there. But we are going to be getting there, given how, well, it would seem that we're going to be getting there, given how the data have been evolving. And I just sent you a chart that I would encourage people to take a look at if you could pull it up on the screen. If not, I will make sure I tweet it out later. The BLS has a new experimental gauge of inflation that they've been talking about for the past few weeks. It's called the New Tenant Rent Index. All the data comes from data that's contained within the CPI housing survey itself. And what it does is it measures prices renters would face if they changed housing units every single period. So the rent component of the official CPI measures the change in all rents, including new leases, renewals, and rents in the middle of a lease. To contrast, the new rent index uses only a subset of the data that the official CPI uses, namely the first survey observations after new tenants move into their sampled housing units. So this is a way more responsive data series, right? It's trying to get rid of the lag that we see in the housing data. In years past, there's been a pretty tight relationship between this new tenant rent index, OER, and headline CPI. It started to widen out in a manner that suggests there's a good deal of disinflation, if not outright deflation, coming down through the pipeline because of what's been happening in house prices overall. Since the Fed met in September and started cutting rates, mortgage rates are up 100 basis points. Redfin just put out a report yesterday morning showing that the average time to sale for a home right now in the country is about 52 days. That's the longest period of time that we've seen since the pandemic. The pandemic obviously had some wrinkles in there, so we kind of ignore that year. But this is a very slow housing market right now, and it's starting to weaken perhaps. And if we do see that disinflation coming from housing making its way through the data, that's an albatross that maybe offsets the impact of the tariffs, right? And you can kind of see a world moving forward where if the tariffs lead to some inflation, but not a lot, and it's offset by other factors in the macroeconomy, then you ultimately have your 2% target reached by the end of next year. And the Fed doesn't really have to do much more than stay on autopilot to get there. And the markets like when Fed policy isn't changing or it's on a preset course.
What is this again? Sorry?
Don't do that.
I'm dead serious. The OER and the inflation thing, I'm like, I love getting in the weeds. So you just threw something new at me. I just want to make sure I understand what this is.
Yeah, so this is trying to get rid of the lag in the data instead of, asking owners what would you be charging for your property. Like they just say, like if I were to rent this apartment and I were to move every single month, where would I be facing? And so the new rental price index, it's all data that comes from the CPI survey itself, right? So it's not like they're conducting a different survey. They're just saying, let's look at the data in a different manner than we have recently. And it suggests that there's disinflation in the housing market coming way, which, granted, if you get disinflation in housing, we have to have a conversation about the employment situation in construction. And if employment in construction falls, then we have a different economy in our hands than what we've been experiencing for the past few years.
Got it. Interesting. I suppose that's fair. I think that's fair. I mean, I'm probably trying to poke at them a little bit, but I just think, the idea that they are a wait and see when it comes to tariffs, but we're not necessarily wait and see when it comes to we're forward thinking when it comes to inflation. Right? We are, let's stop cuts. Let's start cutting before we get to the 2% inflation target because we don't want to wait until it's too late. So we need to start cutting ahead of time. So, they have this very forward thinking approach when it comes to sort of the inflation everyone is experiencing on a day-to-day basis, but then sort of like we'll know it when we see it type approach when it comes to tariffs. I think that's fair. I'm probably trying to find a grievance where there probably isn't one. So then let's move on then from the FOMC, which Ilya and I had said yesterday, there isn't much room for this to be anything other than a nothing burger. The only question is whether or not in his speech he leans more towards growth or more towards sort of inflation. If he balances it, there's actually probably a decent risk that the market doesn't like balanced. They probably want to see him lean a little bit more towards growth, and I think he was probably as balanced as he could be. So I think the next 2 days are going to be really interesting in terms of price action. That said, give me your point of view on the whole DeepSeek saga. This thing is like the gift that keeps on giving. It keeps unfolding into some sort of like the shows we were just referencing. Like this feels like a Days of Our Lives kind of soap opera. Each day, the new information drips out. Now, OpenAI accusing DeepSeek of like copying or utilizing their model to train their data. You start at the beginning from this bubbling out like November, December about the improvements that they were making on their algorithms to the announcement of DeepSeek and what they were able to do with quote unquote $6 million last Friday and the price action that the sell-off that we saw on Monday. Take us through sort of your thought process and what this means short-term and long-term from your opinion.
So first off, is this real? Is the question a lot of people are asking. And when you look at benchmarking results, there's a company called Artificial Analysis that does this. They benchmark for various a whole bunch of different tasks, different academic areas, what have you, reasoning, logical reasoning, yada, yada, yada. And what they see is that basically DeepSeek V3 R1 is on par, a little bit worse, just right up there with ChatGPT in terms of performance, which not surprising. We've seen different companies put out models that are, they're on par with ChatGPT, and then ChatGPT has a new one, O1 or O3 mini, yada, yada, yada. But what sets us apart is the fact that there's a big cost difference, okay? The price per output for the input and output prices for DeepSeek R1, the input price in US dollar terms per 1 million token is 55 cents. The output is $2.19. By comparison, for that same level of performance from ChatGPT's O1, it's $15 per 1 million tokens of input price, and it's $60 per 1 million tokens of output price. So for a 30th of the cost, you're getting the same type of performance. That's great, right? Victor, if I have two Hershey bars here and one costs $5 and one costs $500, I might buy the one that costs $500. It's the same darn thing. Gives me the same results.
Which one's made by a foreign adversary?
They both are. So what did we do here? There's four main things that we talked about on Futures Power Hour on Monday. If you missed it, we'll rehash them here. What did they do versus ChatGPT? Having read their white paper, they maybe use the H100 GPUs instead of the H800 GPUs, which are currently under export restrictions. And apparently,
you listen to Alexander Wang.
Victor. I have such a good conspiracy for you, my friend. Don't worry. Okay. They make some code tweaks here to help maximize memory efficiency. So smart use of it. They also do a little bit more precise training. So they only update the essential parts of their model using what's known as auxiliary loss free load balancing. They activate and update just the most relevant sessions of their training. So they slash their GPU usage by 95%. Basically, they have, let's say there's 100 things and only 5 of them are accurate. Meta is training their entire pool on all 100 things. DeepSeek's like, we can get rid of the other 95. Let's only focus on those 5 that actually matter. So more precision. Compression, as I said the other day, I don't know anything about compression. The only practical knowledge of compression I have is from Silicon Valley. Their low-rank key value joint compression, which reduces memory usage without compromising performance. So you get a smaller memory footprint, faster results, lower costs. If you use DeepSeek versus ChatGPT, and you look at its thinking tokens, you see how it just works quicker than ChatGPT does. And then there's this reinforcement learning, what they're calling RL. And I think that's the big step forward here. It's focused on tasks with verifiable answers. And so it works through solutions. And when it knows that it can get to the right answer, it's not only double checking itself, but it's basically updating its memory, its neural pathway for a human term, to make sure it just gets there quicker next time. So training, it gets faster. The recursive course improves. Now, why is that also? This is all legitimate. Like the performance is real. The cost may be real. $5.5 million to train a system like this, if it was about 20 million GPU hours and you could rent GPUs at X dollars, you know what? It's not unfeasible that the actual cost of the training itself on the GPUs costs that little money. That doesn't take into account the salaries of the people who work there, right? The overhead for the business, all that other stuff that's involved. That led to this point, all of the other models that they've built and trained to get to here. All that aside, though, one thing that I read yesterday from Dylan Patel, who's a semiconductor analyst, it was a throwaway comment. He doesn't believe that this was done on just H100s. And this is what you were getting at with the Alexander Wang comment. Why couldn't it be done on the H100s? Well, maybe it's possible. But if you look at NVIDIA's revenues year by year, you'll notice that, or quarter by quarter even, you'll notice that in the most recent quarter, they sold $17.4 billion worth of goods to Singapore, which in the first quarter of 2024, which predates the chip ban, they basically had nil revenue going to Singapore. The chip ban goes into effect. What do we see here? $6.2 billion in revenue to Singapore, from Singapore, 12.4 billion from Singapore, then 17.4 billion from Singapore. And during this time, exports to China are barely growing. That's an interesting number, though, Victor. 17.4 billion worth of revenue to Singapore. If an H800 cost $22,400, they sold in the ballpark of 776,785 H800s to Singapore. To put that in context, a single H800 uses 350 megawatts of electricity, as I learned today. That means if Singapore was using all of the H800s that they purchased in the most recent period, they would have needed 271,875 gigawatt hours of electricity, which is fascinating because from the most recent publicly available data that I could find, Singapore's grid only produced 53,085 gigawatt hours of electricity as of 2020. So unless they 5x'd their electrical capacity in the past few years, there's no way that Singapore has these chips on their shores. They are most certainly in China. And so
I can't speculate to that, but I can tell you.
I know you can, but
I can tell you that I've had conversations with people that work in business in different industries here that live in Singapore. Mm-hmm. Greatest thing that's happened to them is I don't say that they love the export controls that we slap on Russia with regards to oil and everything else, because what you're alluding to, whether that happened with chips or not, I'm telling you, it is happening with everything else. It's happening with oil. It's happening. All of this stuff. That's why there's that saying that capital goes where it's treated best. Like if you're under any illusion that like that oil embargo or whatever that we put on Russia actually meant that they couldn't sell oil. Like the whole world just didn't buy that 9%.
Or the trade stopped. Like
you force it through different channels. And perhaps you put some new players in. Perhaps that takes a new route. Perhaps instead of in lit markets, you force them into dark markets. But capital goes where it's treated best. And I think, I think a lot of people know that, but I think that the general public is under some sort of illusion that once you say you can't sell chips to this country, it's like, okay, well, they're not going to get chips. Haha, let's see what they do with that. Or you don't buy this country's oil. Ahaha. Now you have to figure out what you're going to do with all this excess oil. Bro, that's not how it works. That's not how it works at all. And so Alexander Wong had said, I think he alluded to the idea that China, or that this company had something like 50,000 GPUs more than people thought. I think that was his number. 50,000 chips more than people thought, which is a lot different than zero.
And 50,000 chips at one company, right? Not saying that in this particular quarter reporting period that NVIDIA has given them all to this company, right? But if you have all these different AI labs in China, heck, DeepSeek was not even on the radar when you look back a year ago in major news coverage for what was going on in China's AI scene, bless you. You don't see their name. It's all about Tencent and ByteDance and Baba. And so the reality is there's probably a lot of leaky holes here. I was mentioning Kyrgyzstan. If you look at the year-over-year level of EU exports to Kyrgyzstan and Central Asia, right in 2023 after the war starts, it's like, a 2,000% increase in EU exports to Kyrgyzstan. Wild. I wonder where that all that's going. So water always finds a level, right? Water always finds a level.
Same thing will happen with tariffs. You slap tariffs on one country, goods will just get sold somewhere else and then and imported from a different place.
But we learned that with
whack-a-mole game with tariffs.
We learned that. Well, that's kind of the point here. Like we're now, if we do that, like China steps in. We saw this with Brazil. We slapped tariffs on soybeans, whatever. China goes into Brazil and says like, we're more than happy to buy your soybeans. And Brazil's like, sure, let's burn down the rainforest. Do you guys want to buy these soybeans? We got to plant more crops. And so it's like, oh my God, what a cell phone, like these liberals in the United States, like, oh my God, we're trying to fight climate change. We have the biggest carbon sink in the world. And we just did something that is now going to force them to burn that down in the sake of this trade. Like, so what another nightmare. So Canada already gets a letter from China yesterday. Hey, listen, if you get into a tariff fight with the US, we are more than happy to buy those goods from you. And that I don't think is a good thing. We don't want to ring fence our economy and become an autarky from the rest of the world. the biggest source of U.S. strength in the post-World War II era has been the fact that our club has controlled the money. We've had more than 50% of global GDP, and up until the past 2 decades, we had over 50% of the world's manufacturing capacity in the West. And since China joined the WTO, that second aspect has failed. We're not really there anymore, and we're slipping below the 50. We're getting close to the 50% of GDP level of global GDP. So in a world where the U.S. has and its allies have less than 50% of global GDP and 50% of global manufacturing capacity, we no longer make the rules. That's a huge problem. And as I've joked with you, like, I don't want to see the empire die in my lifetime, nor my kids. My grandkids can kick rocks, though. Like, as far as I'm concerned, I'm done and dusted by then, so who cares? But realistically, doing all these things to their maximum means that you are ending the Pax Americana from 1945.
That's too funny. Grandkids can kick rocks. Let me ask you I think the more practical application then. Did anything that just transpired over the last week, did it materially change your outlook in any of these names to the extent that the price action discounted them? So let me give you a better setup. So on Monday, my thought process was that likely you just had an acceleration of adoption. You had an acceleration of innovation. And that's kind of what Sam Altman later sort of said. I think he tweeted something like, I'm excited to have a competitor. The model is impressive. We'll move some things up on our roadmap. And obviously, we're going to have something better, something to that extent. So my initial take was this is going to accelerate the path of innovation and likely the path of adoption. If you could get the same if you could get a certain output for a 30th or a 50th of the cost, are you going to lower your capex? Or are you just going to increase your output expectations? And my personal opinion is all the people that are spending this massive amounts of money on capex, they're doing it to get a dominant market position in whatever market they're in. So they're not going to go, oh, more efficient model, let me decrease my capex. I don't think that's in the cards right now. I think if anything, it pulls up people who weren't going to meaningfully spend in capex, and it sort of brings the tide lower so they can get in to start spending a little bit of money. I think that's the more likely scenario than any big spenders decreasing spend at this point in the game. So, but the meaningful part to the incentives, I can't speak to the model because that's not my thing, but the incentives part was, well, you had one major player, and what they were selling was you got to scale. Data centers, more GPUs. Those players were selling you scale power by buying more of this shit. And then all of a sudden, you have a real live competitor that is selling efficiency and optimization, not necessarily just buying more shit. And so to me, that is relevant, that there is an alternative here. And that alternative could potentially is saying you don't just have to buy from these basically monopolies more GPUs. There is another way to scale up and to compete with those people who have the money to spend. So let me stop for a second. That, to me, had implications to utilities, to energy consumption. It had downstream impacts, which I think were real and relevant. In my personal opinion, I don't know if the value of like NVIDIA and a lot of these, I don't really think it had a material impact in the very short term. And so to me, I look at this probably a short-term discount. They were too expensive to begin with, but if you liked the expensive stock a week ago, I don't get why you wouldn't like the expensive stock today. That's my sort of premise. What's your thought on price action of these underlyings and whether or not you think you're getting a good deal, and if you throw some chips down right now or you wait for the dust to settle? What do you think?
So I think that we need to, this isn't necessarily like a tasty perspective, right? It's more of like a fundamental Warren Buffett kind of view. Like work backwards from the first principle of what companies make the most money in the world. And they're the companies that have the biggest moats because they control the biggest bottlenecks. And the bottlenecks are the places where demand far exceeds supply. If you're the person controlling the bottleneck, you make a ton of money. And so our understanding collectively in the market the last few years has been there's an AI future coming. We are not built out for it, and we don't have nearly enough chips to get there. And so NVIDIA, which is the company that's making these chips, it sits atop that bottleneck. The demand for its goods far outpace the supply. It has orders booked for quarters into the future. And the only way that we get to this future is by passing through this bottleneck. And what we learned that this week is that, yes, while this future is still real and coming, the bottleneck is not nearly as tight as we thought it was. We can get to that future a different way. There's more than one way to skin a cat after all. So maybe, just maybe, we already have the computational power necessary. Well, the CAPEX said no, because from my understanding of all this is that it's not really the training that you need the GPUs for, it's the continued inference process. That's how you have the commercial or consumer-facing application, right? So yeah, that's great that DeepSeek was able to do this. Will DeepSeek be able to produce the AI model that ultimately is the one that's readily and widely available? They may not be able to scale because they don't have access to the proper GPUs, nor the amount of them that's going to get to that future. Now, granted, we just had the conversation about Singapore exports, so maybe, just maybe they do. But the point here is that the bottleneck is now shifting in our perception. One thing I did on Monday morning, I was talking with Nick Batista and Thomas Westward about this, 8:30 in the morning Chicago time, and telling them I think that we've moved from phase 1 to phase 2. You and I have called phase 1 the picks and shovels phase, building out the infrastructure, getting ready for the gold rush. Well, maybe we just entered the gold rush phase, the application phase. So a basket of stocks that would benefit in the application phase, we were looking at Monday morning, we've been tracking this week here on Tasty, and that basket's up more than 2.5% this week now. Names like Amazon and Meta and Oracle and Palantir, companies that are data brokers or data aggregators, companies that can monetize data, cloud providers. IBM, look what IBM just did today after hours. They had a great set of earnings, and they would be a phase 2 company that would do really, really well. Their Watson X product actually designs proprietary AI systems for your individual company. So imagine now, because of the scale of this, every single mid-sized enterprise in the United States that didn't have a real-world application for AI because it was just too costly, they can now experiment and play with it, kind of in the same manner that Microsoft did a year or two ago when they brought it in-house and started playing with it and experimenting with it. Now we have Copilot on every desktop, Windows desktop in the country. So if we're moving into phase 2, what are the companies that can monetize AI applications? That's certainly a concern of ours. We need to think about what companies are going to be doing well, helping fuel the AI development. That's consumer data platforms like Amazon, like Meta. It could be financial data providers like S&P Global or FactSet, FDS. It might even be like a healthcare data aggregator, IQVIA, the stock ticker. They combine their data analytics with AI to help optimize clinical trials. Maybe this makes its way into something like Intuitive Surgical, ISRG. But this is a completely different set of factors than phase 1. Phase 1 is all about the shovels. Let's sell everyone the picks so they can start to mine sometime in the future. And what we just learned is like, oh my goodness, the gold is actually a lot closer to the surface. We don't need to keep going back and finding more picks. We can just start digging right now, right? We can actually just start panning for the gold here. And that's really exciting. What it means for semiconductors, it could be a drag. The concentration risk of NVIDIA maybe means the headline indexes are way down for a little while. But individually, a sector rotation basis, you're still seeing the strength in banks, you're still seeing the strength in discretionary. And a lot of these, the Mag 7 names, ex-NVIDIA and ex-Tesla, basically have brought in $300 and I think now $25 billion in market cap this week so far, essentially offsetting the loss in NVIDIA's market cap itself. So this is just money being reallocated to where people think the real winners will be, as Druckenmiller says, 18 months from now. And is NVIDIA still worth a 55 or 70 PE in that future? Maybe not. It's not going to make a ton of money. It's going to make those tens of billions of dollars every single quarter. It's just, do we value that now if there's higher convexity or more alpha sitting in other segments of the economy at this point in time?
I think this ends up being a big winner. When I listened to our Lord and Savior Larry Ellison when he was talking on the.
They're gonna say Dan Ives.
He's an apostle. When I was listening to the announcement of the Stargate project, they asked Larry Ellison what does he see as the applications of this joint venture. I don't know if you watch this.
Minority Report.
Yeah, bro. He basically said that we have the ability to study people's blood, their DNA, and through mRNA technology, we can start to create personalized vaccines. So
hell yeah.
This something to
Which reminds me, now that RFK is HSS secretary, I better go get tapped up.
Did he get fully confirmed or what?
I don't know. I just, I don't think go get 3 or more COVID vaxes.
Another thing.
Yeah, get a bird flu vax.
You would. I totally see you as that guy. I think you'll be first in line for the bird flu vax.
Topped off. Maybe I grow wings.
Give me topped off. Bro, I think some part of me thinks, and even if I'm wrong, I still think you're getting a lot of value here. And it goes against everything I stand for, but so did private prisons, and it worked as an investment theme. I just can't. I think there's so many ways for this name to win in the next 25 years, and you mentioned, or not 25 years, in the next 12 to 24 months. Intuitive Surgical was my biggest, the biggest quiet winner of 2024 for me was Intuitive Surgical. It went one direction with almost no volatility. There was no variance in this stock. It went one direction all year long. Probably for 2 years, it's gone straight up.
I mean, you look at the IBRs throughout last year, it's just steadily rising. Like, price is just chugging along. I think I can. IBRs in the 20s, 30s. You're like, what am I? You're like, you turn around, you're like, oh, this is a $300. Oh, this is a $400. This is a $500 stock. When did that happen?
Nobody talked about it. Nobody talked about this stock for the last couple of years. It went one direction. It was a massive, massive ripper from $200 to $600 with almost no vol, and nobody talked about this thing. I'm out of it now. Watch, this thing will quadruple from here. Like, you sold, my son will be like, you sold Intuitive Surgical, Dad? It'll be like, you know what I'm saying? It'll be the Microsoft of his time. Anyways, all right, if we're past the picks and shovels phase into the applications phase, you've mentioned a couple of names, but if you could pick 3, let's say, and you had to put them in an account for your child, what are those 3? What 3 do you pick out of the applications sort of deep value bucket and say these are the ones that I would put a bet on? This doesn't mean that you're saying that these are going to be the winners. It just means you like the odds and the setup of these names for the next 5 to 10 years to be the winners of the application phase.
Meta, for sure. Amazon. I mean, these aren't going to be big name. And then
give me one smaller mid cap.
IQV.
I hadn't heard of that one until you just brought it up.
Kivia, yeah, they're an interesting name. They've had a really good run recently. A lot of my attention last week, which, I was hoping that we'd see something a little bit more with like EXC and some of those names that were kind of fitting the mold of Vistra Energy. EXC actually this week, Exelon got upgraded by Morgan Stanley, so it kind of weathered the storm that was Monday, thanks to that upgrade. But where's the puck going to be, right? That's the question. And for some of these companies, particularly if they're smaller or mid-cap, you run into the problem that rates are still up, and so they probably hold more floating debt. And that's going to be just, again, the proverbial albatross around their neck. That's also why I think Meta and Amazon are well-positioned. I also think Meta and Amazon are well-positioned because Lena Khan's no longer at the FTC. And in this...
that's unfortunate.
I wouldn't call it Trumponomics. I'm calling it Fafonomics, as Kyla Scanlon has called it. And she's the one who came up with the term vibe session. So hat tip to her. She's a great brand sense about her. But like, this is the kind of like, hey, oh, you're going to not let us land migrant planes? 50% tariff. How about that? Oh, you want us to do this? Okay, we're going to do that. Oh, we're going to remove these guardrails and those guardrails and get rid of this executive order for this and that. And okay, well, if that's going to be the case, then the big companies stay big, right? The big fish continue to grow bigger. I don't find it particularly.
But that's the case with both. The problem is that's the problem with both the parties.
Yeah, but Lena Khan,
both
they're
of these
like
parties,
trying to get it done.
I agree, but outside.
But like now you pointed out at the top of the show. Sure, at the top of the show,
picking winners and giving them government money. He's picking winners and he's giving them reduced regulations in their industry.
Picking winner or a different
we're doing this. We're doing the same thing, regardless
exactly.
if you're in a red shirt or blue shirt.
Well, we just swapped out elites. We just swapped out different business leaders. And so when you look at the people that Trump's cozied up to, why was Trump the president behind the TikTok ban? And what changed his mind? You can look at the reporting on this. He had a meeting with this guy, Jeff Yass, several months ago, who is a big investor in TikTok. And literally the day after Jeff Yass gave like $10 million to his super PAC, Trump's like, actually, I don't think we should get rid of TikTok. And so all these other people that have a vested stake in a social media company go, yeah, those Section 230 reforms that we were talking about, you know what? I think we can influence those, guys.
Yeah, but Kamala did the same thing, bro. She didn't. When they tried to ask her around that stuff, all she would do is she would obfuscate, and that's because Reid Hoffman gave her and her campaign so much money, and he didn't want that thing to go anywhere. So the only reason that thing even got close to getting quote unquote banned was because it was all, Biden is a lame duck. He's on his way out, and he just let it. He's like, "You guys figure this out. I'm just going to let this play out," because he wasn't beholden to any.
I don't know what Biden was doing at the end of his term there. It's like, it's just, but you run into like the real situation where we go from having someone who's a potential reformer at the FTC in a legitimate capacity. You both admired her work and what she was trying to accomplish, and that's just not where we are right now. So. Again, forget whether that's a good thing or a bad thing. Our job as traders is just to look at the situation realistically, because reality always wins when it comes to markets. And so realistically, do we have someone who's more or less likely to try to, persecute big tech companies than they were over the last 4 years? I think the odds are lower now. So I'd rather have, in a world where maybe tariffs bring in higher structural inflation moving forward, what companies are more likely to stay afloat through that, have the balance sheets to that? It's going to be those mega cap tech companies. And I'm a don't fix what's not broken kind of person. So the winners continue to win. And there's I feel there's so much regulatory capture right now.
As long as they bend the knee, which Zuckerberg has 100% bent the knee.
And
I think that's
today, 25 million.
Yeah. What you just said is fascinating because, what world, Meta basically stopped becoming a serial acquirer. At one point they were just a serial acquirer. They were buying up anybody that was coming close to them or challenging their primacy, and that stopped happening. And can you imagine a world where the FTC sort of allows them to make big purchases again? We haven't seen that in quite some time. That would be sort of an interesting shift. Speaking of Meta, before you get out of here real quick, Microsoft, Meta, Tesla, after the bell. Any thoughts on some of the earnings on these huge companies we saw after the bell from your point of view?
They continue to do the old Jack Welch. Beat, guide lower, at least in Microsoft and Meta's case. They strong earnings and then say, we're not going to do as well moving forward. We have these concerns, these uncertainties. That's the safe thing to do if you're in management at a company. Tesla's reaction surprised me because the earnings weren't good, and it felt like the stock has like a first buddy premium attached to it right now. And so do we think that, Tesla, is it trending in the right direction or the wrong direction? Would the trade wars that Trump wants to start help or hurt Tesla? If the EV credits are removed, does that help or hurt Tesla right now in the short term? It's probably like I see the EV credit story as kind of like a J curve for Tesla, where initially it's going to undercut the competition longer term, right? But initially it's probably going to depress EV sales. All the other companies then are going to trickle out and die, and then Tesla just absorbs all the market share. So what's the impact there? What about the carbon credits that they subsist on? They've been taking an axe to a lot of regulation in this first week and a half under Trump. Could we see that the carbon credit trading system that Tesla relies so much on for its revenues with other car companies. If that goes away, right? So like I'm just a little shocked. I'm a little shocked. That we're trading where we are 403 because the earnings themselves weren't good. But I don't know how you short the company of the guy who has the ear of the man who controls the levers of the world's largest economy. As I told you before, like when the person with their hands on the levers of the world's largest economy says something about that economy, you can't ignore it. When it was Obama in March 2009 saying this looks like a pretty good time to buy stocks, everyone chided him at it at the time, but that was right at the low in the market. Like he said that March 9th, 2009, the market bottomed on March 6th. And if Donald Trump comes out and says he wants a weaker US dollar like he did in 2017, what happened to the dollar the rest of that year? It fell. So Musk has the ear of the man with his hands on the economic levers. That to me is the single most important thing for Tesla, whether or not Musk retains that influence.
Last question for you. We got past the Fed meeting. We got past some decent economic data at the beginning part of this week. We got past 3 large tech companies' earnings reports. You could throw in a handful of others, IBM and others today. And once we get past Thursday, you'll have Apple and others. We came into this week, I want to say vol was like 14 and change, 14 and a half. We're up to 16 and a half. All things considered, would you say price action has been relatively resilient? And I know there's to say, are you out of your effing mind? NVIDIA was down, 17% at the beginning of this week. But I'm saying all things considered, and given the fact that we've got a dense economic calendar, a dense earnings calendar, given the way we started the week, are you surprised at the relative resilience of price the last couple of days since Monday?
I am. Definitely for sure. Yep. You look at the market action on Monday morning, 5% down at one point overnight. That was getting real slippery. And then you make your way through European hours and, American traders realize, like, why are we getting worked up about what the Europeans think? They don't have a tech sector. How could they possibly know how to interpret this news? So we'll just start buying. That's not a joke. That's my legitimate feeling. Like, what people are saying, like, oh, European stocks were a real safe haven on Monday. They don't have a tech sector. It was a tech sector sell-off. So why would it impact Europe? But that just goes to show, like, there's that popular meme going around right now. Like, the U.S. has ChatGPT and Llama and Bard or Gemini, and you look over at China, and they have now DeepSeek, and you look over at Europe, and like they have those plastic caps that don't fully disconnect from the Evian water bottle. So it's a
innovation.
Europe's succumbed to the failure that is needing to grow and innovate, right? And they have significant population and demographic issues, and they have a shrinking labor pool. So they, and more dependence, if you will, more people who are in retirement age and aging out of the labor force, and they have very generous, benefits for these people. But who's going to pay for them? A smaller pool. So you got to keep raising taxes, and it's stifling things over there. They need a new solution. Obviously rooting for it.
It's fines too.
The regulations are out of control.
The regulations, which seem to have the teeth that people want here in the U.S., I think some people will look at Europe and they go, look, at least they have the stones to go after tech. But in reality, they don't have tech, so they need to tax where that revenue is coming from. And so, do they slap on these huge fine on U.S. tech companies? Yes, but it's kind of out of necessity more than anything else. Your innovation is regulation, and yes, they are holding these companies to account, but unfortunately, they don't have a market alternative. They don't have a market solution.
But Trump is doing the same thing, though. Like, Trump and the EU are singing the same tune, which is to say, like, we are a large economy. The EU is the world's largest single market. The U.S. economy, the largest standalone economy. And if you want access to our consumers, you got to play by our rules. Yeah. And so that's all Europe's doing. They're like, there's a lot of us, so you got to listen to us. And
but
so
that's
the world
the
is
last
okay.
gasp for power. That doesn't last very long. That's not a sustainable strategy.
No, and I could go on my shtick about Germany deindustrializing or UK post-Brexit, but we're out of time, so we'll save that for next
week. Friend, if people want more from you, tell them where they can go.
Here on Tasty Live, Monday through Friday, Futures Power Hour, 1 p.m. Eastern, 12 Central. Of course, on Overtime with Radigan and Spivak, Monday through Thursday, 4 p.m. Eastern, right after Last Call. Tuesday mornings with Tom and Tony on Let Me Explain, 9:40 a.m. Eastern. And then, of course, here with Victor on Wednesdays, The Price of Truth, 6 p.m. Eastern. Not this week, but next week, we're relaunching the prediction trade. We have a Super Bowl special coming up for next Thursday, so be sure not to miss it. That's going to be back here on the network every other week, 4:30 p.m. Eastern. And you can find me on, is it X or Twitter this week, Victor?
Twitter.
You can find me on Twitter.
Maybe if he brings back the astronauts, I'll start calling it X.
I looked into that, Victor. Did you know when that plan was approved to bring those astronauts back?
Well, I don't know. I don't
August.
Shit anymore about Biden versus Trump. I don't give.
I'm just saying, like it's
all an elite. It's all elite political ruling class filled with corruption and self-dealing. I'm under no illusions that one party is better than the other. But for the sake of an election, there is a lesser evil, and I made that choice because it's the only choice I have. Anyways, if you want to follow me on Twitter, you can follow me at Victor Jones, Owen Jones the Zero. Because I like to be difficult, I want to thank our extra special guests that God willing we'll have here every Wednesday to help us guide us through this wacky world. Mr. Chris Vecchio, it's always an honor and a pleasure. Wish you the best this evening, sir. To all of you, do me a favor, hit the like button, subscribe to the channel before you get out of here. I will see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace.